Is your 70th birthday before June 15th of the current year? Do you like to make financial gifts to charities that you love? A qualified charitable distribution, or QCD for short, is a fantastic opportunity that you have. A QCD allows you to give up to $100,000 to eligible 501c3 charities directly from your IRA anytime after you turn 70 and a half. Let's look at an example and see how this works. Meet Sam. Sam is very generous, and every year he gives to his church, the local food bank, and the homeless shelter. Sam retired 3 years ago and has been taking distributions from his IRA for regular expenses. For the last several years, Sam has had the IRA distributions sent to his bank account with federal taxes withheld, then wrote checks to the charities. Sam turned 70 on January 1st, and he wants to reduce the taxes that he pays on his distribution. When Sam turns 70 and a half, he can make those gifts with qualified charitable distributions to give directly to the charities from his IRA and never pay any taxes on those gifts. You might ask, how does the tax treatment differ if I do a qualified charitable distribution rather than do a distribution from my IRA to my bank account and then write a check to the charity? The main difference is that the qualified charitable distribution never gets included as a taxable distribution that applies to your adjusted gross income. This is important for two reasons. First, because qualified charitable distributions do not increase your adjusted gross income. Each dollar contributed to charity via a qualified charitable distribution has an impact in reducing your tax burden. By contrast, because the standard deduction is much higher than a few years ago, we find many clients making charitable gifts that have no impact on their tax bill because they're not itemizing. If you do not itemize deductions and make charitable contributions, those charitable gifts are not currently helping you reduce your tax bill. Second, because qualified charitable distributions lower your adjusted gross income, they may help you to avoid Medicare surcharges. At certain thresholds, Medicare surcharges kick in. Since qualified charitable distributions lower your modified adjusted gross income, QCDs can help keep your MAGI below the threshold where additional surcharges apply. As you can see, a qualified charitable distribution is a great way to give charitably while reducing the taxes paid on the distribution from your IRA. If you have more questions, please let our team know. This content was provided by Retirement Planning Services. We're in Knoxville, Tennessee, and you can visit our website at www.seriousretirement.com. The information in this recording is intended for general educational and informational purposes only and should not be construed as investment advisory, financial planning, legal, tax, or other professional advice based on your specific situation. Please consult with your professional advisor before taking any action based on its contents.